Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 2nd of October. I'm Daniel Lam, your host for the podcast. Yesterday was a public holiday in Hong Kong. Now, walking through the shopping mall at the IFC in Central, I saw the busiest activities that I have not seen for a few years in Hong Kong. Could this be the boost of sentiment in China coming through into real demand? Well, since our last update on Wednesday, the PBOC announced that it bought 200 billion CNY worth of bonds in September, which is the second month of net buying. This confirmed what we said in the podcast back then, that the PBOC balance sheet is expanding and it is injecting liquidity. Now, more importantly, the change of stance in the Politburo in an urgent manner is material. And this means ongoing support until the goal is achieved, i.e. to stabilize sentiment, revive confidence, supporting growth and expectations. The key areas to look at now is whether such supply-side measures will feed through to help the demand side, i.e. is this going to translate into a rise in property prices? Will this result in rising consumption figures and so forth? And more importantly, will the government be following up with demand-side stimulus? In the meantime, the tactical rally in Chinese assets is likely to continue because valuation is still very depressed despite the recent rally. So for example, Chinese equities is still at roughly 15% discount to Asia ex-Japan equities. Bad news, such as further evidence of weak economic performance, could spur further equity gains, as that would lead to expectations of more additional and stronger policy support. And now you're going to ask, how high can this go? Well, so far, there's evidence that a good part of the rally was from short squeeze. For example, last week's squeeze in A-shares underweight positions was the third largest on record, followed on Monday by the largest day-on-day price increase since the GFC days. Also, the divergence in futures contracts prices relative to their equivalent cash-based indices shows that technical factors did play a large part in this rally. Now, further price action will depend upon whether the local investors are going to participate in the rally. So far, the margin balance of local investors has not really been surging. The strong inflow into foreign domiciled ETFs, i.e. excluding China and Hong Kong, was the biggest since June 2022, showing that there is FOMO from the foreign community, and that played a major part in the rally. We pointed out two key resistance levels in the Hang Seng Index. The 20,500 level had already been reached, and we're likely to see some seesawing in the very near term before the index possibly challenge the key resistance level at 22,700. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.